Open. Today is February 20th, and it's 10 a.m. in London when we're doing this market update. I'm gonna take a look at the market, see what's going on here. We do have some interesting moves. Aussie dollar versus the US dollars below is 2019 low. New Zealand dollar is also moving towards its 2019 low. So starting to see the dollar is having massive gains. And about the dollar, look at this is the dollar yen. Do you guys remember the idea to buy here around 109.80? Well, the market is now at 111, 112 more or less, which said you can buy here. You can also buy here. And the market, and I don't really know exactly why it went up, but it went up like crazy. And if you did buy down here, then your risk reward ratio would be like 6 times your risk, which is very, very good trading that. Imagine you put 1% risk, you make 6% return. I mean, that's amazing in one go. And yeah, we're going to talk about that. We're going to talk about other stuff as well. But let's begin with the other stuff, which is the euro. So the euro, not much has changed here, and it's stuck in its strong downtrend. Okay, it's just stuck in the downtrend. There's not so much for us to do. We talked about selling here, and then I've been saying, well, look to sell on a bounce, but that hasn't happened. And until it happens, I think it makes sense to wait. I know maybe that's not what you want to do, but it is important to be flexible in your trading. And something that we did talk about was buying gold. And we also talked about buying dollar yen. So just by being flexible, we don't always have to trade the euro dollar, which I know again is sort of the most popular pair. But right now, from a risk reward ratio perspective, it's not really we don't really have that opportunity. And right now, this is in a strong downtrend. And you might feel, well, oh, this is never going to bounce. Well, when we're trading up here, you know, it felt like it was not going to come down. Well, it did come down. It come down hard. And you can have a lot of these surprises and moves in the market. It happen all the time. So that's why I think if we go upwards, I think that would make sense. And if we take Fibonacci from this high to this low, then you're looking a little bit less than a 50% correction. So it's not that much. Now here's the GBP versus the USD. And the GBP versus USD has come down quite a bit. With the Aussie dollar down, the New Zealand dollar down, the dollar Swissy up, the dollar yen up, the euro dollar down, GBP has pretty much been the only thing that's been able to withstand the pressure of the dollar until yesterday when they started to decline. Now, if you look at this today from a daily chart, you know, we can see that we were stuck in this triangle and we breached it and then went all the way up and actually canceled that breakdown. But then we coming back down now again. And if we do trade below 28.70, this might be the beginning of the price moving properly away from this range. And the triangle itself suggests that as long as you're below 130.68, this market can go down to 126.21. And if you look at this from a bigger picture perspective, you can see how you're pretty much around these levels here. And you know, if this is a big range, which is what it is, then we're very far away from the lows and we're relatively close to the highs. So if we go down a little bit, especially as everything else is coming down, then it makes perfect sense to me. Now the biggest issue with the pound though is just that it gives you a ton of false breakouts until it doesn't. So I think you need to be very, very careful you trade below here. But if it does trade below, it might go down and then up and then maybe a little bit lower and then maybe we'll be down at 126.21. But it's not super interesting because of all the false breakout it does give us. And here's the dollar yen. So the dollar yen did ridiculously good. So yesterday we said, and the day before that, and I think even the day before that, I said, let's look to be bullish here. And then I said, all right, we're now here. You maybe want to give this a little bit more time to trade to the upside. And it did go all the way to the upside. It went really quickly, very fast, and hasn't really stopped here. Remember, stock markets have been going up for quite some time, and the dollar yen would normally go higher with the stock markets. But the dollar yen has been very difficult to trade, has so many false breakouts for a very long period of time, and then finally has some sort of a move here. And we're pretty much at the high here, which is 112.16. So if you didn't grab profits yet, this is definitely the time to book 100% profits on that. And then I think we can definitely go a little bit higher. I guess we can easily trade above this level, get some stop loss orders triggered, but then it will probably pull back down again. As for longer term targets, I'm not sure if this is 100% the best way of treating this, but it could be treated like head left and a double right shoulder. And then we had that move. We went all the way down, but we traded above this level. And now the trend is, it continues to be bullish like that. And maybe this is it. Maybe. I can tell you this, though, if we take out this high here, then the next natural thing is to trade to the next high, which is 114.23. So it does line up. Now trading this today could potentially be a bit boring. I think it can go up a little bit more, and then it's going to go down, and so then it's going to linger here, and then eventually at a later stage it might come down. And I don't have any strong levels for you now, but I suspect maybe the first fib or 50 fib around this level could be interesting. So let it go down, and then maybe from here one could look to get involved, because the last major low is down here, and that was a 109.59 level, and that is the trend defining level. So congratulations if you managed to get this trade. 6 times your sugar ratio if you nailed it perfectly, and congratulations. I think this is quite good. In regards to gold, we talked about buying here as well for this to go upwards. It's gone up a bit. Hasn't been a huge change. We do have this massive ascending triangle, and I do think we're gonna go up to, I think we're gonna go up to 1,600. I think this is a long-term bullish market, and as I said before, sometimes you have, well, many times you have the breakout and then you have the correction. So if we do go down to something like the breakout point at 1593, then I think people might look to buy, and then I try to lift this to the upside. Then you got support at the 1577, which is down here. So it does make a lot of sense to potentially see something like that. Here are crude oil prices here as well. We talked about buying here at 50, 54 a few weeks ago with stop loss orders just below here. The new stop is the level down here. Let's just change the labeling of this thing. And I think if we do go down to 52.02, I think some people are going to be buying here. If you did buy down here, there's nothing wrong booking a better profit here at where we are, unless you just want to keep it for the push to the upside. Fib from high to low gives you this as the 50% correction level, and I think that's where we're probably going to be heading. But you do have all these lows around these levels that could easily stop. So if one is not in position, I think people will probably wait for that pullback, and then we're looking to get involved down here. German DAX. So a few days ago we said look to buy here somewhere, and today I'm saying look to be bullish from 13,692. There's no change to the outlook here. We had this big range, which is this one, and we had the breakout. Now it is reminding me a lot about this situation here. So if we do not trade much higher relatively soon, if we do start to take out, and if we do take out something like the February 9th low, sorry, this is February 13th. If we do trade below that level, we're probably going to go down again. So we're in this situation now. But hopefully what will happen is that we'll just do something like this and just go upwards. Difference between high and low gives you this target. S&P. So we talked about buying here a few days ago as well, and there's no change to the outlook. The trend is bullish above 33.49, so no change here at all. What else? Bitcoin. Well, massive blow to Bitcoin traders yesterday, and a massive blow to the altcoins. The altcoins were quite fragile to begin with, and they got quite a big blow, especially EOS. So what's happening here is that we were dealing with a downtrend. We're getting lower and lower and lower highs, and then went down, and then we took out that high. So what happened at one point is the trend short-term bullish, and this would have been your new sort of trend defining level, this level here. But we traded below that again, and now we have a lower high compared with this one. So the way it looks like now, I hope I'm wrong, because trading Bitcoin is fun, or trading cryptos is fun because they move. It's like trading like currencies nowadays. It's like an old car. It goes really, really slowly. Cryptos goes very, very fast. So the breakouts you have, instead of waiting like 3 months like the S&P to reach its target, you can reach your target in 2 weeks, 3 weeks. And that's why I like cryptos, because of the speed. And then you can take that money and put it somewhere else. Anyway, what's happening here is we're stabilizing here. So the short-term trend failed again. But I suspect, unfortunately, that this could have been it. It could have been it. I hope I'm wrong. But if this is it, then what's going to happen here is that we probably is going to do, no, we can't do it. It just looks bad. But you see this big triangle? Let me unlock this. This big triangle, we could be that we just turn lower from that, and then we could potentially go down to 7,000 again, or 8,000. If you look at things like Ethereum, things are, you guys have double top and then potentially a double bottom here. So you have on the 1 hour, you still have some hope here that this can work out. But for example, in the case of Ethereum, if we trade below like 243, then it's game over here. Then this is a new high here, lower high, and then we'll probably come down like that, and then we'll see what happens. We'll probably be trading sideways for a bit longer, and then maybe, given the way these things work out, where do these things meet? Well, they meet here, so maybe in May or something, or later on say it goes down. In April, we're down here, and then we start to go upwards. Maybe summertime we'll have a breakout. And remember, this is a wedge. It could break the downside, worst case. Just to give you an idea, this is EOS. And EOS was going upwards. So going up and up and up and up and up. And then it tumbled. And if I just take fib from this low to this high, it bounced from the third fib, went upwards, and it looked good. So maybe you should have just gone on a little bit and then up, but it went all the way down, crushing through this level. Now technically, forget about the fib for a minute. Technically, we're still fine because we're still above that low, but it's a bit fragile when something needs to correct that much. And here again, so if you look at it from a bigger picture perspective, you are maybe dealing with something like this. It sure looks like it. More consolidation. But the upside to this is been consolidating for a whole year at that point. And of the massive consolidations, you have some very explosive moves. So it could turn really good eventually. Okay, let's see if we can answer some few questions. So we have True Invention, good morning to you. And we have Marvin as well, good morning to you as well. So we've got a few questions here. GBP number is positive, but why is price going down? Why? I agree, I was looking at pound data yesterday. And, inflation was, 1.8 versus 1.6 expected, and higher than the 1.3 in the prior year, prior month. You look at the unemployment rate, it's very low levels. You look at wage growth, it's a very low level. You look at the PMI, still going upwards. However, the pound can't withstand the pressure that you're seeing in the other markets. In the euro dollar, people are talking about rate cuts. At the same time, in the US, you got the good NFP, good ADP. Remember, this happened like 2 weeks ago, but people still think about this. And then yesterday, I think it was on Tuesday, we had Empire State Manufacturing Index, which was better than expected. And that was the first data from February. And that was interesting because that could have shown a bit if the coronavirus would have impacted the American economy. It didn't. On the other hand, the numbers from Germany out on the same day, the ZEW index, that went down. Not as much as people, a little bit more than people hoped for. Not a huge decline, but a bit of a decline. So people saying the coronavirus is infecting the European economy, and people might cut. So you have the euro down, you have the Australian economy, which is down. You have the New Zealand currency, which is down because 50% of all their exports go to China, so not China, Asia. And then you have just some 30% or so of those goes directly to Hong Kong and mainland China. So you have all those pressures in those markets. Yesterday, the Turkish central bank cut interest rates. So there's a lot of things now aligning itself for the dollar. And what's happening is that the pound can't by itself withstand the pressure that we're seeing across all the other markets. People are saying, hold on, euro dollar is down this much and this much, and GBP is down like this much. So there must be some sort of calibration there. That's why, for example, I know I'm going off track here, but some people, they really love their stocks. I remember a friend of mine, he was all into video games. This is like maybe 15 years ago or something. 10 years, yeah, 15 years ago, or something like that. And he knew about these video games, and he really knew everything. His name is Antonio. Now, Antonio knew everything. He's like, oh yeah, these guys, they're gonna release the new Grand Theft Auto. I guess you know about that game. And he's like, yeah, they're gonna do so good and blah blah blah. You know, I think it was Grand Theft Auto, some of the big games. And I'm like, yeah, okay, but you do know that we're heading into a recession. This was 2000. Yes, I remember now. It was 2008, because he had made some very good profits on that stock. And I told him, like, look, you probably should be selling some or taking some profits, because you know very soon nobody's gonna be buying video games like they used to do. And he's like, no, this company is so good. But when all the other companies in that sector go down and everything else goes down, then you can't have a video company worth this much, and then you have a car maker, being worth less than the video game company, to give an example. Obviously, it never landed there, but everything is about relativity here, or the relative valuation. And that's exactly what's happening here. So even if you have one individual country or one individual company and then one individual share that's doing really, really good, if everything else is coming down, then it will be pulled down. That's why, for example, people say, with stock picking, that's why it's difficult for stock pickers to beat the markets. Now everybody's super excited because Tesla went up and some kids make millions. But if you look at actively managed funds, I think for the last decade, like 28% of them have been able to beat the averages. So the rest of them, the 70 of them, do not beat the averages. Anyway, we've got a question here about Euro Yen and also about the Aussie dollar. Okay, so let's take a look at the Aussie dollar. We begin with the Aussie dollar. So this is the Aussie, and I've been bearish on the Aussie for quite some time, so I'm quite happy about this. And as you know, I do quite a lot of research for clients as well, and this is something we've been talking about for quite some time, and actually delivered some good trade ideas on this as well. So we had the break here, and we reached that target because we had head and shoulders. Now we don't necessarily we have a small pattern now, but last week I told my guys we could sell here on February 5th for it to go down, and then I said we can sell here, and then it go down. Now we're looking at a funny looking descending triangle. It's not the best descending triangle, but you always need to have a bit of imagination here when it comes down to trading. So you got that downward slope trend line, and you have these lows here, which look a bit like a double bottom-ish. So you have the break here, and the next target for the Aussie dollar is 65.63. So break this, we can probably go down. Now if we swing up to 66.66, which is the breakout point, I think people are gonna sell again. By the looks of it, we had the breakout yesterday, we had the correction already today. So if it does swing up here, then this is what you should be looking at. A lot of the stuff is about preparation. Many times, just looking at a good practice that I've done for many years is like I look at many different markets and I do analysis for all of them. And there's a lot of people that do the same. And they spend the weekend. You look at 127 setups or markets, 100 markets, and then the different variations, and then you'll see patterns as well, which is quite interesting. So when you see the euro lining up a bunch of sell signals across many different pairs, then that's a very good sign that the euro is going to come down. And you can find things like that just by analyzing. And then you just do your watch list, you put your alerts, or your everyday, you scan through the markets. Anyway, that was it. Euro yen, that unfortunately I was bearish. I did an article on that one as well. The whole thing here just went bad. So this is the euro yen, okay? And you have this left and right shoulder. Some people say no, Alex, that's not a head and shoulders. But I had this like the head And I had this. I know I'm being very creative here. So I had this. Now what happened here is that we went far higher than I was hoping for. So we went upwards. And I did put some stuff out, I think also for you guys. And here's where you need to make a judgment call sometimes. And what happened yesterday was just that the yen was just going crazy, as you know. So when we start to reach these levels here, which are the sell zone, then you probably shouldn't be selling into that when you see it. And there's some other little golden rules, small rules, which is the time of the day. So probably, you know, as you understand, from 3 p.m. London time, the market starts to slow down. However, here it pushed up and then it pushed up. And then this is your first bearish candle here at 5 p.m. From 5 p.m. it's usually okay to get involved. But here, what I would have done yesterday is I would just have not traded that. I just wouldn't have done that. And if you look at this today, it's a very, very, very strong move. And we're at these highs. And realistically, as long as we're below this level, we're probably going to go down. So your risk reward ratio here for selling is very, very good. On the other hand, there's a very high likelihood as well that you get stopped out, because that's sort of the problem with markets many times. The better the risk reward ratio is, the more likely is it that you're gonna get stopped out. And it's important to find some sort of a balance there where it makes sense. And currencies, as you know, they love to mess with you. So if it does go above 121.14, then it might go a bit higher. But then I don't think it's gonna go to 122.5. I don't think so. But we could do. So this is where I feel maybe it's not the best thing to trade. Where it's maybe better to focus on something like the Aussie dollar, where you can afford to get in early for the move to the downside. Because it's the same thing here. Sometimes when it happens, if this will go all the way up here, then yeah, we can sell with stop on the other side. But it's very likely that that would have been just gone up a bit. There's like a balance. There's like that sweet spot. Correct 50%, that's fine. Correct 61.8%, that's also fine. Correct more than that, like EOS, then it's probably a trend reversal. So that's, and unfortunately, you don't know that until the market is at those levels. Okay, we're gonna wrap things up, guys. Don't forget to hit that like button. As well, for any of my Arabic speakers, I'm gonna be on CNBC Arabia today. It should be at 2:15, 2:20 p.m. London time. So that should make it 6 p.m., 6:15 p.m. Dubai time. So you can check that out. And for anybody that doesn't speak Arabic and still wants to check it out, just Google for CNBC Arabia. It's unfortunately, if you speak Arabic, of course you'll understand everything. But it's just in Arabic. So if you don't understand it, then it's gonna be difficult. I'll see if I can make a recording for you though, and I'll see if I can upload the version where I speak English. You can check out, just go to the ATFX. Actually, silly me, just click here, and this is the ATFX channel. And then down here, you get all the videos. So I usually upload here. So what I do is that I actually upload the recording where I recorded what I said in English. So I just effectively do my replies in English. So that's me on February 4th. Okay, guys, have a great day. Thanks so much for your continued support. I hope you trade well today. I hope you have a good day on the markets. And I'll see you guys tomorrow around the same time. Thank you.